Welcome back to another episode of the Finance Bible podcast. You're joined with myself, Zeke,
and your co-host, Oscar. But before we get into it, please note that nothing in this podcast should ever be considered as personal financial advice.
But if that is what you are seeking, get in touch, let us know, and we will hook you up with the correct professionals.
Sit back, relax, and enjoy the show.
Let's get into it.
Welcome back to another episode. Today, the boys are actually together again. Zeke's had his trip up north, went MIA for a couple of weeks. Oh, yeah, a bit of, who's done that? Troy and, was it Chad?
Troy and Chad.
Yeah.
Troy Bolton.
The boys. But yes, mate, you went a bit MIA, which is good. I believe you were seeing clients up north. But you're back down. You're in Melbourne at the moment. But you released an interesting podcast last week, really about the population shifts and the market trends. So you did mention on that podcast at the end of it that you wanted to continue that and go into a bit more of a deep dive into another episode with me when we're together. And that's what we're doing today. The secret's out of the bag.
There you go. Yes, apologies in advance for the monotone behaviour during that podcast.
Very monotone. We have had a chat about that.
Oh, come on. Get out.
Get them up and about.
No, it was just a very quick, simple podcast where I just wanted to get the stats out there. Stat episode is going to be boring no matter what. Like, I was like, you know what? If they're going to listen to it, they're going to, and if they're not, they're not. So I can be monotone.
And we can confirm you listen to it.
Yeah, you can.
Quite a few listeners.
But I can also say I was not feeling 100% on that day.
Right, you don't need to apologise.
Apologies in advance. But moving forward, I'm feeling probably about 70% today. A little bit crook still. I had a bit of a naughty weekend, we'll say. With the weekend, we could as well say. Mr. Melbourne himself. But yeah, jumping straight in. So I'm not going to go too far into detail with everything because we went through it last week. We're just going to elaborate a little bit, get Oscar's opinion, kind of have a bit of a conversation about some of the statistics that were thrown out there. And just before we move into it, this is all research based on like SQM, CoreLogic, REIA, Matusic, ABS, and then a little bit of our own research as well, separately, just with what we know in the market, what we've been selling, what we've been buying, and that kind of thing. So without further ado, let's do this.
Yeah. So the first part, we may as well go on the list down we've got in front of us. So let's talk about the dwelling sales. So you did mention they have substantially increased in the last 2 years.
They have. So in a 3-year period, there was about 1.8 million sales in the most recent 3 years. However, 3 years before that was like 1.3 million, give or take.
The question is, in today's day and age with the increased cost of living, how has that happened?
Well, there we go. That's a brilliant question. That's why we're here to converse.
Interest rates have gone up.
Yeah.
Cost of living's gone up. And if you're just like everyone else and watch the news at night, you will see fear.
Yes.
But they're still rising. So what is happening?
Well, the funny thing is, even with that, like, supply has dropped drastically as well. Now, that could be because the sales have risen substantially, obviously. But the overall supply, like in terms of how many sales can be, basically how long of a market supply you have based on what's currently listed. Back in about 2011, it would have lasted, if no one has listed a single property today, in 2011, it would have lasted like 7 months.
Yeah. What is it now? 5?
Yeah.
No, 5 from 2014 and 2020. Now it's 3.1.
Yeah. So it went from like 7 to 5 to 3. So 3 months right now. There's only 165K, give or take, at the time of doing the statistics, if you exclude listings over 180 days old. The reason we do that is because if the property that's listed for 180 days is out of that market cycle where normally a listed property it sells within like, maybe 80 days.
Hopefully, yeah.
Yeah, if they're over 180, they're either unique or there's problems or something, they're not readily available. It's not very long. 3 months of supply.
It's not long at all, is it?
It's less than half of what it was. So it's a tight market.
13 years isn't that long of a time either.
No, it's not.
Like 2011, like that's the year after the Pies won the premiership. Still remember it like it was yesterday. It's not long ago.
Of course you remember that. He loves the Pies.
Oh, yeah.
Median dwelling values on detached houses are about $1 million nationwide. $1 million. That's up there. And from 2000, that represents a 6.9% annual growth rate. they've multiplied about 3.6 times since back then, which,
I do like the 3.6 times statistic.
yeah, well, 6.9% annual growth rate is good. If you look at, say, for example, shares, the reason that people would prefer them, and again, this isn't financial advice, as you know, you heard the
Insert
disclaimer
disclaimer
about five
again.
minutes ago, however long we've been talking. Shares are known to return about 8% per year, right? Or 9% per year. So properties come in at 6.9% for the last 24 years. It's actually really a lot closer than people think.
Mm.
So in that circumstance, if you're getting a 5% rental yield as well,
Yeah, you got to throw in the rental yield too.
then it's about 12% of a return per year. Whereas with the shares, you might be getting a 3.7% dividend if you're lucky, and it might be partially franked or fully franked.
Hmm.
So again, that's sitting at about 11%. So property and shares are realistically giving you the same amount of return per year, but one of them has leverage, the other one doesn't. And if
Yeah,
it
and I
does,
know
it
which
might
one
go
I
up.
prefer.
Common sense, right? Um,
Well, you'd think it would be.
you would.
You'd think.
That's your
That's
copy,
my
mate. That's
copy
not
over
my
here.
copy.
Pick up the
Um,
wrong one. And now apartments as well. So they've gone up 5.5% annually. What are they? Median price of $654,000.
which is still like people bash apartments, right? And
I
don't
don't
get
like
me
apartments.
don't get me wrong. I've only ever really liked maybe three or four apartments in my time, and only ever actually sold one, I believe, if I
That's actually
recall
done it right.
correctly. Oh,
That one's
outrageous!
done well. But
Well, it was picked up for 560K, now with 850,
yeah,
renting 770, 870 a week.
and we
That's
were
two
there the
years
other
ago.
month actually.
We were beautiful.
And I'll be there in 2 days. So I might actually go pop in and just see how it's performing.
Just go have a look at it and go, wow, that's a good looking building.
Yeah, maybe put it on the
Wow,
Instagram story.
it's a
Wow,
nice building.
28 days.
If you get it, you get it. Well, at the point of listening, they won't be 28 days, so they might be confused.
26, 27, 26.
Mm,
So ideally, we'll pop this out today or tomorrow.
we'll see what happens.
Probably not today.
But yeah, people bash apartments, and we've fallen into that category before to an extent. Apartments aren't all bad.
Not physically.
Not
Not physically
physically.
going
No,
bashing.
we're not violent individuals.
No.
But they've gone up 5.5% annually, reflecting a 2.5 times increase since 2000 as well. And that's a pretty good number again.
It is. Like, yes, but also no, because it's the media. This is the whole Australia we're talking about. Like, some areas fully outperform the other areas in the country. Like, for example, in Melbourne, I see a lot of apartments up for sale. And I also know a lot of people who are buying their first home as an apartment, for example. And I just bite my tongue. I'm like, what are you doing? And it will go kind of to the trend later on as well with the, um, what do we got? We got statistics actually around apartments for Melbourne,
We do.
like Sydney, Melbourne, Cameron, and Darwin, all not worth diving into because there's really no changes there, I believe, from
Yeah,
the
not overly
statistics.
notable, yeah.
But if you are looking at an apartment, you really got to figure out the location because, yes, it's very cliche that location is everything, but like apartments, it's way more important to look for the location comparing to a house if you're buying an apartment because the risk and reward is quite substantial. And Zeke is trying to hold in a sneeze. I can look, mate, let it out,
I will not.
let it out.
And as well, in that number, you've got to take into account that there was periods where certain areas were doing nothing or going backwards, and then they might have been saved by something. Like if we just take Brisbane, for example, units there from maybe 2000 to 2015, terrible, shocking, like
Mm.
outrageously horrible. And then they've kind of come back in the last 9 years because you've got
Well,
the
the Olympics as
undersupply,
well
the
coming through.
Olympics, COVID, people migrating there. Like, there's a lot of things to take into account. And it's funny how market can just bang change like that.
Overnight, and then you make a bit of money.
That's true. And another interesting point, and I did actually briefly speak about this in my podcast, the solo edition, the Mr. Monotone. But
At least you know it.
I do. I was sitting there going,
Sorry.
"Oh, this is terrible," but I was like, "Oh, I'm so crook." Um,
All black.
I know. I had to get it done.
You
It
did
was
have to
like
get it done.
the the,
The
the
listeners
listeners
need it.
needed it.
Fans.
Yes. Traditionally speaking, like property cycles, share cycles, that kind of thing, investment cycles, they've been noted and like agreed upon between professionals like 8 to 10 years per cycle. Some even say as much as 12.
Yeah, some
Um,
people really push it out, don't they? And they're very firm on it. Like I listen to some podcasts and they're like, "Oh yeah, 11 years
yeah.
is the general cycle," and they're very firm with it.
Yeah,
But
but
it's
since
not.
since 2000, it's been like between 4 and 6 years. And I probably expect that it's going to come down to like every 3 years soon. Um,
And I think that's I'm a fan of that.
yeah,
If I'm an investor,
I am
I'm
too. Oh
happy
yeah,
with that.
because you can take
Oh,
real
you can
advantage of.
really build wealth,
Yeah, you can.
especially if you're younger.
Yeah, we're not advocates of timing the market, but if you can time the market, you can. So,
Yeah,
um, yeah, I was saying that would be due to like the information age and how reactive everything
I
is
do recall you
nowadays.
saying that. Oh, I
But
agree because everyone can just pick up info from their phone now.
yeah, so do you share the same point of view that it's going to just keep coming quicker and quicker and
It
quicker?
has to, doesn't it?
Yeah, like you,
It's common sense. Like technology's getting better and better, and information's coming quicker and quicker to everyone.
yeah, and people are just so quick to react to stuff now. Like they don't
Well,
think
everyone's got
things
FOMO.
through, and yeah,
You know why as well? I think the whole crypto thing, like those crypto millionaires, like five years ago, had people just getting rich within 1 week of making $1 million. I think everyone now subconsciously is like, oh, well, come on, I want to quickly make money. Let's go.
yeah, I think that's just going to keep coming quicker and quicker. Not only due to like information, but I think where we are in the world with just everything like, COVID out of nowhere, and how quick government mandates and stuff were for that kind of thing. And then like reactions to elections and stuff, which are every
Mm.
4 years. And then you've got the chances of wars starting. And it's not the fact that there was never wars before. Don't get me wrong, there's always been killing and that kind of thing going on. Now we just see it 24/7.
Yeah,
Like it's
literally. Open your
exposure.
phone up, TikTok,
Yeah.
algorithms.
Yeah. And people just getting involved in stuff like protests happening here that
Oh,
are going to have a huge impact on the wars over
horrible.
there. Genius. Um,
Yeah, no.
in terms of last financial year, moving on, detached housing prices changed, and some were positive and some were negative, as I discussed. The losers we spoke about were like Canberra just, it didn't really go down, but it did. Hobart copped about 5%. And I said it last week, I'm going to say it
Melbourne.
again. Don's favourite place, Melbourne, copped a big 7%.
Probably because
Um,
of the good old Labor government here
well, that's a
doing a big. I tell you what, every single Victorian I know
triggered,
hate. Like, I don't like saying the word hate, but hate the
loathe,
Labor government.
say loathe,
Loathe,
dislike with a passion.
dislike with a passion
Yes, that is loathe. Good word.
the
Um,
Labor government. And also now, the land tax here is ridiculous.
yeah.
So it was only last week I was speaking to a real estate agent in Perth, and he mentioned to me that probably around 88 to 90% of their buyers in the last 6 months are all Victorians because everyone's selling their investments here because the land tax is just ridiculous. Like, why would you buy a property here for an investment if you're going to get absolutely hilled
Mind you,
by
but
the land tax?
before that, why would you anyway? Let's be real.
Yeah, I
Melbourne
don't see the.
had a track record as one of the
Well, I
worst
think
cities.
back like 20 years ago, yes, would have been
Yeah.
elite. Like, I would have bought. Well, you know, it was affordable to buy in like South Yarra.
And the supply wasn't overcooked.
No, you could buy in South Yarra, Paran, Port Mel, like the good areas.
And people
But
weren't
now it's
rapidly
just
leaving.
like if you're going to buy something in Victoria, you're probably going to be buying something out probably pretty far out west or then near Geelong, which some places near Geelong are right, but there's so many better places when you look at like Perth or Queensland or even South Australia
Even
coming
regional
through.
New South Wales
Yeah,
too.
there's just
Like
so many better options in terms of investments.
hand on heart, I would personally I'd go Northern Territory before Melbourne.
Geez, that is a big call.
That's a big call,
I know
and I
you
stand by
just
it.
like investing up in the NT.
I do. But yeah, Melbourne's copped a lot of things as well, like as well as the politics and stupidity, and
It's a very woke city.
it is
Very
very.
woke.
It's kind of like a mini America,
Yeah, well,
like
we
like
have
a weird.
protests every week.
It's like a mini California,
Yeah,
a
no way.
city state. Realistically, as well as all of that going on, and as well as the already oversupply and that kind of thing, and then COVID happened, all the international students left, and then people here had a max exodus to Queensland. Like you had,
I was one of them moving up to Sydney.
you did, yeah, you had over 38,500 people relocate just to Queensland during COVID.
Yeah,
So, and they haven't come back. Well, but why would you? If you're paying $1.2 million for a house here, where
you probably pay
people
800K up there up near the beach.
brand new build, 800K back then anyway. But yeah, they've just been losers on many fronts, unfortunately, Melbourne. Whereas winners, on the other hand, you had Sydney about 7%, Brisbane about 8%, Adelaide about 9%, and then Perth was about 15%. Darwin was about 2%, not really relevant. But yeah, Perth
Why not, mate? There
mashing
could
it.
be a couple of Darwin listeners.
Yeah, but
Pretty relevant
2%.
for
No,
them.
I'm saying the number's not that relevant. Darwin as a place,
What about
very relevant.
the good old regional hubs?
Regional hubs, good call.
Which ones did well in the country?
Gold Coast did very well. Sunshine Coast did very well. Townsville did very well. Cairns did very well. I think they were all floating
Cairns, the
between.
home of Aussie Shore.
Maybe, mate, maybe that's going to make it boom even more.
Yeah, anyone hasn't
Um,
watched it,
uh,
highly
in,
recommend.
interesting show. Definitely not Geordie Shore quality. Definitely not Jersey Shore quality.
No,
It's let's just say it's Australian made.
it's Aussie Shore.
Yeah, it's like the Babadook, greatest horror movie of all time. But yeah, between 11 and 17% for them just listed, and then units and townhouses actually outperformed.
That
Uh,
is pretty insane
yeah, they were
and
sitting at about
random.
20%. Um, there's a lot of reasons for that. There was a low price point, very small cost of entry, and then the undersupply and everything of what's going on. And it's also important to think like the people who were moving, like say international students and stuff, if they were moving from Melbourne to Gold Coast or something, and they would have been getting units and that kind of thing. So
Mm.
it all comes and goes.
Now, in terms of overseas buyers, nearly 10% of new properties in Australia was sold to them. And what was it, 5% of existing properties as well, or just shy of 5% actually.
Yeah, that's true.
So it's increased since COVID.
Higher, yeah, higher
Yeah,
than pre-COVID.
which is good for
Good for prices.
good for property prices, but also at the same time, I'm not a big fan of it because I want Australians to be buying real estate in Australia. I
Yeah,
don't want, individuals from, let's just use China or America or any country buying our real estate. It's just, you know, people are pretty firm on that, ruining the good old Australian dream.
well,
But good for prices.
I think at this point in the market, it probably wouldn't be a bad idea to invoke a bit of harsher rules on that internationally, because the prices are high, right?
Yeah.
As we said before, they've gone up like 3.5 times since 2000. That's very quick, rapidly outperforming inflation. It really limits the people being able to enter the market, and it limits people, even who are already in the market, from like getting a second one or a third one if they haven't done it correctly or if their income's low.
Yeah.
But
It's
it's
get
just making
outbidded
it
easily.
very difficult for the younger generation. Like, yeah, sure, I know that all the people who are out there in their like 50s, 60s, 70s, they're like, oh, we did it tough back in the day. Like, it wasn't easy for us either. Yeah, but your property prices didn't go up that quick.
Yeah.
Like, your property prices weren't at the level they are on the multiplication of income factor that it is now. Like, it's never been harder to buy a property than now.
No. And another issue as well is the quite a few millionaires migrating to Australia.
Yeah, that one shocked me when I was doing the research on that.
Yeah, I can't
Uh,
believe we're the second highest country in the world
yeah,
to
I
have
mean,
migrating millionaires.
UAE,
Sorry.
obviously, I knew that was number one, but then I was like, maybe
But how are we
America, because
second?
like
That's
California and that.
ridiculous. And that's just
Yeah.
impacting, you got the first home buyers. They're trying to get a house for even 900K and then probably going to get outbidded by a few hundred thousand from these millionaires.
Yeah, and the thing that actually really shook me on that, like when I read that we were number two, I was like, all right, let me do more research into this because that's like actually bogus. I need to know more. Um, but once they're actually here, like the millionaires, they hold housing more than the average millionaire as well. So if you got one millionaire that's not in Australia, let's say they own like five houses, and then you've got one that's in Australia now, they've relocated, they normally hold more than that. Okay.
Right.
So on average, they hold more property and they hold less property outside Australia.
Yeah,
So they
right.
hold more in total, but less out of Australia. So that
So
means that,
property is their way of getting richer and richer.
yes, but it means that ultimately they're holding more property than other millionaires and only in Australia.
Strange, isn't it?
Yeah, so they're really driving the market here. And they normally hold like 40% of their wealth in property,
And
where
all of a sudden they sell it.
the global average is only 29% for
Yeah.
millionaires. So they hold 10% more of their wealth in property, more in Australia. Like, yeah,
And you
it's
mentioned
ridiculous.
the majority of those millionaires are what Russian, Chinese, Indian, as well as members of the UK. I know, yeah, Chinese makes sense because there's always a lot of Chinese millionaires, but the Russian and
And we see a lot of
Indians,
them around, we know.
that is true. The Russian and Indians is a bit
The
surprising.
Russian one really shocked me. The Indian one, I wasn't overly surprised. The Russian one completely shocked. I haven't
Yeah,
met a
Russian,
single Russian.
like a millionaire. Same with the UK. Well, it's not often. I don't really. I've never really met like a wealthy. individual from the UK and Australia who like invest in property here
Yeah, like not
and
saying
lives here.
they don't exist because obviously they do,
Yeah,
but
obviously,
like
but it's
where are the
I've
Russians
never.
in the
Yeah,
UK?
strange, but stats don't lie.
Yeah, maybe if you're out there, feel free to flick us a DM and say, hey, look, I've got a higher Russian percentage in my neighborhood. Lots of them here, and I'd love to actually go visit and just. I'll have to bring my brother along because he can speak Russian and he can do a bit of translating for me. But same
So
with the
good.
UK, like if you're in a neighborhood where there's a large number of them, they have nice houses or cars, and you see them getting their coffee and stuff.
Yeah, say
Let us
g'day,
know.
g'day.
In terms of development, which is a interesting thing to talk about, so NAB actually surveys their developers and stuff. They do it quarterly, like just to see what their problems in the market are. Labor and construction, they're two biggest issues now. So labor being employees like workers, bricklayers, that kind of thing, which we're already aware of because we've seen companies drive from site to site. Hey, how much are you getting paid to do this per hour? Oh, 20. All right, come do it for me for 25.
Yeah,
Then I just jump jobs that day.
yeah,
The other cost being the actual construction cost, obviously, which is just materials and all of that kind of stuff, which makes sense. Obtaining permits, lack of like sites, high interest rates, and tight credit are still issues, but not as big as they were. And here's a good one. This is one that I really got to experience. Anyone who's growing up in an area or who's living in an area where there's land and they're seeing the developers come and destroy it and build their houses and that will understand this. For you yourself, Don, people in Melbourne, people in Sydney, like central Sydney, developed Melbourne, developed Brisbane, won't really have a full understanding of this. But there's little cookie cutter boxes, right?
mm,
Which um, picture like all the 600K packages that you're seeing around, but they're like
yeah.
little three bedrooms on 300 square meters.
Mhm.
At the back of my old house that was all developed, and you just had bang, 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 bang. They're cookie cutters, right? Because they're all the same. So they now cost 550K to build, whereas back in 2019 they were about 375K. So build prices are going up quite drastically. But in saying that, on average, if you spread it out over the last 30 years, they've only gone up 4% a year.
Yeah,
They just had a
that's what I'm reading
huge
now.
jump due to COVID.
Moving on. Vacant dwellings are still at their lowest levels since 2007. So the rate is around 1.3%, meaning 5 days a year your property is vacant, which is
Pretty good.
elite.
Yeah, very good.
That's very good.
Yeah, they're still the lowest they've been since 2007. And
That's very, very
I mean,
good.
everyone who's probably listening to this podcast would understand what was going on 07, 08, 09. So, yeah, that's pretty self explanatory. But yeah, 1.3% vacancy, roughly 5 days a year. It's pretty good. So you get a property, you settle on it, you get a base manager.
That's
It's normally rented
perfect.
out within the week.
Yeah.
Yeah. So, it might be you do an open home the next day, process applications, bang, you've got a tenant. Pretty good. And rent's going up pretty
Yeah,
drastically,
good
about 2.6 times.
if you're the landlord.
Yeah, great if you're the landlord.
Tough if you're
Uh,
trying to get a rental property.
yeah, yeah, for tenants out there, it is a bit tough. I've always found as a tenant, I am a tenant. I don't intend on owning a home in any point in the future.
But
Um,
owning homes and investments, you're
yes,
happy
yes. I
to.
mean, as in owning a owner-occupied property where I live, a principal place of residence. I always find that just offering $10 a week more gets it done. Like just
And it's $10 a week. Like, who
it's $10
cares?
a week. Yeah.
Yeah.
Like I literally just go in there. I'm like, oh yeah, yeah, cool. Like just be a good bloke about it.
Pay a
Be a bit
thousand and ten.
respectful. Yeah, I'll pay an extra $10 a week on the application, and then they're normally pretty quick to do it because everyone else is just applying at the actual price it is.
Some people are lowballing.
Yeah, some people do lowball,
Yeah, I do.
and everyone out there is probably getting a bit frustrated at that answer. They're probably like, "Well, you're contributing to the increase in rental prices." I might be, but if I own investment properties and I'm increasing the price of it, or if my clients own properties and increasing the price, then I'm doing them a favor. And also, I just want somewhere to live. Like, leave me alone.
You're getting a bit of hate mail, are you? I would love you to get a bit of hate mail. It'd be so funny.
I reckon it'd end pretty bad.
I'd be a bit upset for you. But
Um,
yes, the rent.
yeah, the rent.
1.3%. Low, low, low.
Yeah, and the other thing is, it's rent prices are growing at about 4% per year, which is outperforming inflation. So and wage growth actually. So rent is getting more and more unaffordable
Yeah,
as
and
we
then in terms of like actual vacancy rates in the country, Perth is still leading the charge
in terms of lowest.
in terms of lowest. So that's just sitting
Yes,
around 0.5, 0.6 from last month. And then you've got Adelaide second, Brisbane third, Melbourne and Sydney following them. So there you have it. As predicted, Perth leading the charge.
yes. On to population growth, which is one I was a little bit annoyed about. My voice might have changed pitches actually. It might
Are
have.
you sure?
It,
I
it,
don't recall.
it may have removed some of the monotone speaking at that point in time, but
Interesting. Might have to have another listen.
the. I mean, I'm not going to go on a rant about it again, but we normally float around or have around 375k like growth per year in terms of population. In 2020 and 2021, it was closer to 100 or 150k in between there. So it's down. Okay, it's down like a good 250 grand, give or take. We then have a year of 650,000, and everyone's like, okay, we're having the biggest growth ever. Like, we're just getting pumped with like inflow of population. It's going up and up and up, and housing's going to be impossible forever. But the simple answer is no. We missed out on like 500,000 people in 2 years. We then had 650k in 1 year, which it kind of levels out. Like, yeah, sure, that there's a little bit of growth in there, but it nearly levels out. It's mostly people returning, and it's mostly the consistency that we were receiving. So that'll be interesting to keep an eye on over the next 12 months.
And it's all
Uh,
realistically overseas students coming through,
yeah, yeah, that's right. Like
which is always it always has been.
it's going to level out. Yes, yeah, it's not a huge thing. So ignore the news. The news loves to lie. The news loves to gallivant rubbish and trick
It
people.
does.
I love watching the news and it's talking about stocks and they're like, it was a huge day. It's gone up like 3 points or something, and then I'll get a call from like a client or from a friend or something like, "Whoa, did you see that the stock has changed? Like, had a huge day today?" I'm like, "Mate, it went up like 0.5% in 1 day, and tomorrow it's going to go down 0.5%.
It's
Like,
it's
relax."
the programming.
Yes. Do not watch the news unless you love it, but then I wouldn't anyway. I know.
You don't like it.
Yes, I don't like it. Do your own research. Let's say that.
And in
Um,
terms of population as well, you've got here that over the next 20 years, we're actually going to decrease our population size
yeah,
due to the
theoretically.
birth rates and the mortality rates.
Yeah, look, long story short, I'm not going to go into the stats on this one again because if you want to hear it, you can listen to that in last
Yeah,
week's episode. Just skip to the end so that you don't have to deal with all the boring parts.
and we'll just leave it there.
We'll leave it there. Well, I hope that you guys have enjoyed this episode in terms of getting a bit more energy in your day and maybe a little bit of
And the
voice
man
change.
is
It
not
was a little bit
monotone today.
ish,
It is good to see.
not monotone. I've had a few tablets this morning to get me back up and about in terms of controlling a little bit of illness. My voice might sound a little bit husky. And if you like that, let me know too. But we'll catch you all in the next episode. Have a lovely day.
Ciao.
Ciao. As always, we hope you enjoyed the episode. And if you did, you know exactly what needs to be done.
Hit that follow button, subscribe, share it to friends, family, or even your co-workers, as sharing this podcast helps not just us, but everyone in the world to learn about their finances.
Thank you, darling.